Hello, my name is Angela Owens with Phenomenal Business Solutions, and I help car dealerships streamline their finances, increase their profits, and grow their businesses. Today, I want to talk with you about smart credit checks for buy here, pay here success. I want to help you understand how you should evaluate your um, buy here, pay here customers so that you can increase the chance of you getting paid for your vehicles. So, credit evaluation matters because you are the lender. When you do buy here, pay here, you are the lender. You're taking on full risk. And poor screening makes you have higher defaults and more repos and cash flow issues. So you want to be able to predict that your customers are going to be paying so that you can include that in your cash flow to know what's coming in and out. And also, smart screening improves your collections and protects your profit. So here's some key credit evaluation criteria. You want to get proof of income and employment stability, residency verification and stability, and that's going to be very important because if you see a lot of different addresses within 2 years, it's a chance that it'll be difficult for you to repossess that vehicle because they're moving all the time. Then you got credit history. You want to check collections, charge-offs, and repossessions. And if you don't want to, due to the fact that somebody is in your lot and interested in buy here, pay here, their credit number may not be the best. So if that's the case, you just still want to check what is actually on the credit report and then make a decision based on the information that's there instead of the number that's there. And then you want to pay attention to payment to income and debt to income ratio. So the payment to income ratio is your monthly car payment divided by your monthly gross income times 100. And this will allow you to see if the buyer can realistically afford the payment. So if they have a $450 payment per month and make $3,000, then their payment to income ratio will be about 15%. So the lower the PTI, the less financial strain and lower risk for default. And you want to aim for a PTI under 15 to 20% to protect your cash flow. Because we all know that the car note is not going to be the only bill that your customer has. So if you can see how much of an impact this payment is going to make on their income, that will allow you to see if they are actually going to be able to afford their payment. You also have to look at the debt to income ratio because, like I said, your customer is going to have other bills to pay in addition to paying you. So even though you can see from the income that they can afford to pay, you still want to see what else they have going on that they have to pay to see if the car payment is going to be feasible for them. So the debt to income ratio is the total monthly debt payment over the gross monthly payments and multiply that by $100. So that measures the overall financial burden and not just the car loan. And then, like I said, it includes your rent, your mortgage, credit cards, loan, and then also the car payment. So you want to include the car payment in that as well. And just look at what all they have outstanding. And you can find that out on the credit report as well. And then you want to take, let's say they have $1,500 total debt divided by $3,000 income, then their debt to income is 50%. And you want to make sure that their debt to income is less than 40 to 45%, so that'll reduce your risk. Now, it may be some instances where you feel like it's okay to do that because some of the debt might be falling off soon. So just, use your best judgment. Then you want to analyze pay stubs and bank statements. So you want to look at regular income deposits and not just cash out. But if they are self-employed, it's possible that some of those cash apps and Zelles and Venmos could actually be business income. So let's just say that the person come in as a hairstylist. If you see Zelles and Venmos and Cash Apps from various people, it's highly likely that she has that steady income coming in. But if it's the same person sending them money, that's probably not really business, because most hairstylists are not going to have the same exact people. They will have their clientele that will come at least maybe twice a month. Every week could be excessive, but that's possible. Some people actually will get their hair done every week. But just think about the industry that they say that they own a business in, and use that knowledge to determine if you want to accept the Cash App and Zelle and Venmo payments as part of their income. You also want to look at overdraft frequency and account balance trends. So most bank statements will tell you the average daily balance on there, and that will allow you to understand if they really can handle paying their payments because they're not overdrafting all the time. Then you want to look at garnishment, deductions, and job stability on their actual pay stubs. So if they have garnishments from taxes or child support or different things like that, you want to take that into account because most times you're going to count for gross income anyway, but those garnishments and deductions will impact their ability to pay you. Also, some people will try to print out fake check stubs. So most companies that pay people on regular payroll will have an app that you can pull up your pay stubs from. Even if they bring you the paper copies of the stub, I would recommend that you have them pull up the app on the spot and show you what their pay stub says right then and there, so that you can compare the paper that you have to the actual pay stubs that they are showing you. It's a lot going on these days. Also, for the bank account, I forgot about that. Some buy here, pay here software will allow you to request that you connect to their bank account. And that what that does is it doesn't get all of their information, but it will pull to make sure that the bank account is valid, and it will also help you to see the balances as well. So even if they bring you printouts, you still want to double check with that software. I think Dealer Center does it, but just check with your software and see if they have the ability to be able to connect to the bank account so that they can verify that the information is correct. A lot of stuff and scams going on these days, so you just want to make sure you cover yourself. You also want to create an internal risk score. So you want to assign points to key factors. So you want to make a point system within your dealership that you can use streamline across the board. So this will help you to determine if you have a good candidate for your buy here, pay here. So you want to assign points to key factors like income, jobs, prior repos, etc., etc. So for example, you may do, if they have 2 years at a current job, they may get 10 points. A past repo, you want to take away 10 points. And then once you get all the points for everything that's going on, you may want to consider maybe 30 points and above, you automatically approve it. 20 to 29%, a manager reviews it to see if it's approved, and if it's under 20, you want to automatically deny. So you can set up the point system however you want to do that, but I suggest that you get an internal point system, and this again will cover you from the discrimination. Like I mentioned, if you have something streamlined, nobody can come back and say, oh, he didn't give it to me because I'm this or that or whatever, because you have a consistent scoring system and you can show them that they didn't make it because of the scoring. So definitely get something like this in place. And this is going to be customized based on your dealership's tolerance for risk. It's possible that your dealership brings in a whole lot of money and it's not that big of a risk with these buy here, pay here. It's possible that most of your people are going with third party lenders and stuff like that. So just determine what you need for your dealership. And then you want to document each decision for compliance and fair lending practices. Like I said, you don't want to be accused of discrimination of any kind. And these are policies to reduce default rates. So require a down payment and proof of insurance. And you want to offer payment reminders and auto pay options. With the auto pay options, I suggest that you use ACH. Number one, is usually cheaper to offer that. And also, people change their credit cards and debit cards all the time, but people are less likely to go and change their bank account. So I would suggest that you do ACH. And also, you can try to offer them a small discount if they if they do sign up for auto pay. That'll just encourage them to pay that way. Then you want to set clear, firm late fee and repo policies. Again, have things across the board and follow your own policies across the board. Now you want to protect your assets with insurance. So always require full coverage insurance before letting them take the car off the lot. And verify that the policy includes comprehensive and collision. And make sure you ensure that your dealership is listed as the loss payee or additional interest or interested person or something like that. Just make sure that they are listed to where if they get in an accident, the money to pay off the loan will come to you and not directly to them. And once they let you know this, you can still call once they give you the insurance, you can still call the insurance to verify that they have the full coverage and that you are listed as the loss payee. And this guarantees that the insurance notifies you of cancellation and lapses. That is, if they cancel their insurance, they have breached their contract with you, and you have the chance to go ahead and repossess the vehicle because they did not hold up their end of the bargain. So you want to know when their insurance cancels, because it would be horrible if they go get in an accident and there was no insurance and now you cannot collect anything on this vehicle because they are most likely not going to be paying you. And I also suggest that you develop some relationships with various insurance agents from different companies. That way, when they come in and they don't know where they want to get insurance from, you have somebody that you can refer to them so that once they get their insurance, you know that they will have what they need to work with your dealership. And if they don't want to get insurance, do not release the vehicle to them. So again, you want to make sure you have good screening, because good screening protects your bottom line. You want to build a consistent process your team can follow. If it's more streamlined, you don't have to babysit your salespeople. They'll know what they can do with the finance. And then if you need help with cash flow or collections, you could definitely reach out to me. And if you need help with even setting this system up, I can also help you with that. So go ahead and book your appointment with me at angelaJowens.com/calendar. And also, if you haven't already, you can download my ebook at angelaJowens.com/5mistakes, and make sure you follow all of my social media. I am giving daily tips on whatever I talk about in my live. So make sure you follow me, and I look forward to talking to you soon. Have a wonderful Tuesday.